Well, it has been a brutal few days for the stock market, with drops not seen in several years. So what will today bring? Well, every Wednesday, we talk with financial expert Chuck Zodda, the managing investment officer from the Armstrong Advisory Group. Chuck, thanks for chatting with us today. It's been quite a busy couple of days here. The Consumer Price Index report just came out, and it appears inflation is slowing a bit, 2.8% on an annual basis. Is that enough to impact the economy in a positive way, given everything that we're seeing?
Well, I think it's important to not take too much from any one data point. Last month, the data came in hotter than expected. And so I think we need to see what kind of trend develops over the next few months, especially because the data that we got in this report from February is before some of the tariffs that are now in place went into effect. And there are potentially more tariffs that could be coming as soon as April 2nd. So I think we need to see how the situation develops and really look back. Quite honestly, we're going to have to get to probably, May or June and be able to say, okay, here's what's actually transpired over the last few months now, because at this point, I just don't know how much you can take from any one particular report. We need to see the trend as these policies are put into place.
Chuck, we've seen a lot of whiplash talk about the tariffs from President Trump. His steel and aluminum tariffs just went into effect. How big of an impact is this having, and do you think it will last on Wall Street?
Well, I think the piece that we are seeing, the tangible impact, even before these went into effect, is that it is starting to impact business confidence. So a lot of the surveys, the soft data, if you will, is starting to show that businesses have questions about what the economy may look like over the next 6 to 12 months. Whether that turns into businesses pulling back on expansion plans, reducing hiring and headcount and things like that, that I think is the potential that's out there over the next few months, but also the potential for higher prices depending on the implementation of these tariffs. Now, we have seen, again, you mentioned kind of this whipsaw and this whiplash that we're seeing where, yesterday as an example, the Trump administration in the morning had announced that they were going to be raising additional tariffs on certain Canadian imports. By the afternoon, that was gone. So I think that part of this is also just trying to sort through, what is intended to be, meaningful long-term policy and what's being used by the administration as a negotiating tool here. And I think that makes it challenging for businesses to try to make those plans for the future. And that's something where when we talk about the potential for a slowdown, it's really because of that uncertainty that you could see businesses pulling back on their expansion plans the next 12 months.
Sure. Things are changing so rapidly, it makes it hard. And this is kind of leading into what you were just, talking about, because we have been hearing the word recession thrown around over the last few days. Yesterday, when asked about it, the president said he wouldn't rule it out, but then he said he didn't foresee it happening. And so, again, it's kind of that back and forth here. Just in your opinion, and I know you're always cautious about this, but in your opinion, is that a reality that we could see, or still just too soon to really know?
It's a possibility, but I think, again, the next 3 to 4 months are going to be really informative because to this point, the data that we do have, it indicates a slowdown in a couple of areas that may or may not become something larger. We've seen a number of these in the last few years where you have 2 or 3 months of bad data and ultimately no recession comes of it. So I think that it's important to contextualize what we're seeing, which right now is the fear that what we are seeing from a policy perspective could lead to a recession. But at this point, the data is not recessionary and it still needs to develop into that if you were to see those worst fears materialize. There's still is a very good chance that you don't end up seeing a recession, but the data the next few months is going to really show, what we get on this front. And I think we'll have a much clearer picture, heading into the 4th of July. I think by then we'll be able to say, okay, here's the trend that's developed over the course of the spring, and here's where the economy's heading at that point.
All right, Chuck, on a positive note, mortgage rates are continuing to drop. So that's great news for a lot of people. Is that a trend that you think will continue?
Well, it's all going to depend on what we see on the growth and inflation numbers. So if growth in the United States slows and recession fears become higher, and typically with that, you also tend to see inflation becoming less of a problem just because with less growth comes less demand. And so supply and demand gets into better balance. So you've got the potential over the next, 3 to 4 months, if the economy slows, mortgage rates could come down further. The catch-22 on this is, hey, if the economy is slowing, do more people who would have been buying homes decide, hey, I'm not going to make that big purchase? Do people who may have lost jobs, obviously they can't necessarily buy a home at that point. But what I will say is the lower rates that we are seeing right now, for those who are, ready, willing, and able to make those purchases, it does give you a better entry point from a monthly payment perspective than even 4 to 6 weeks ago. And so that's something that I think, as far as, how it looks heading into the prime, peak of the spring housing season, gives people some more options there, which is certainly, I think, some good news on that front.
Okay. All right. Chuck Zodda from the Armstrong Advisory Group. Thank you for helping us every week here sort all of this out.
All right. Have a good one.